Welcome to Trading Lounge and the SP 500 for the 7th of May. Just starting on the weekly chart, have a look at the bigger picture here. So we're looking at this as wave 3 over here, and then an A wave, and an A and a B and a C wave for the B wave here, and then 5 waves down for the C wave here for wave 4. And from that point we're looking at 5 waves up here which we have in place, and we can look at that as wave 1, and currently we're looking here as wave 2 here. That can pull back to the 61.8%, which is down at the medium level here, 2,500. However, with all these sorts of targets, it's better if we just count the actual waves as the structure unfolds. So that's what we're doing. The main reason that we've got this wave 4 in place here is because this move here is in 3 waves. However, we always need to be looking for the unexpected. So if this count is wrong here, then the market will, as it comes down here, will just continue to move down. So we need to be at least mindful of that. And also too, we like to play to win. So we like to look, have all the scenarios sort of covered, and then take the best opportunity. Let's drill into this here, into the daily chart. So the move to the upside here is that we have our impulse wave to the upside here as wave 1, and we're looking for it to pull back to wave 2 here. And as I may have mentioned before, that when you set a target at 61.8%, it's good to, if you're accommodating different counts. In this case here, we would want to see just 3 waves back to this point here. If we see 5 waves to this point here, well, then we've got a bearish scenario occurring, because if we get 5 waves to the 61.8% rather than 3 waves to the 61.8%, then we'll be having a bounce and we'll go down. So what I'm also trying to say here too is that we're not going to miss anything. Okay, so we'll be all over this. But anyway, our main point at the moment is in both of these. I mean, it's good to have it. Look, our alternative count is in the same direction, and it's going to have the same wave structure. So that's a nice fresh change rather than having 2 different directions. So drilling in further here, we'll look at both of those counts in a little bit more detail. So on this 4-hour chart here, we've got our 5 waves up here, an impulse wave, and we're looking for an A wave, a B wave, and a C wave coming back. Will it pull all the way down here? I don't know, but we are short at the moment, and we'll just stay short, and we're going to look at the obstacles in the way here. So one of the first things here is that from the wave A here to the wave B here, we're looking for the market to pull back up to the 2900 and then start to roll over. So that's occurring nicely in that particular space. I think it's also important that we have a look at the bearish count for this as well, which is the same. So just going to a smaller degree of structure here, where we have all of this down here, these 5 waves as wave 1. And we'll look at this as an A and a B, and 5 waves up for the C wave for wave 2 here. And then we would be looking, as I mentioned, we'll be looking for 5 waves down in this structure here to the 61.8%, and then an ABC correction here, and then down again from that point. So we don't need to look at this further count down here unless we get those 5 waves there. And I have to say, looking at wave 1 here and wave 2 here, it does leave enough space for 5 waves if indeed it's going to pull down that far here. So we can see, we'll be trading in and out all of this, but so it doesn't really matter if this count is right or wrong, but it just happens to be, in this case, we have two counts, but they're both heading in the same direction. So I think it's a change, isn't it? Okay, so drilling into the hourly chart. So what we've been looking at here is we've been looking down for the A wave, and that was cool. And then we were looking for the B wave to come into play here. The A wave's rather small, but I've counted all these little waves in all through here, and it does have it as a nice A, B, and C wave here. So the other, just to chuck a spanner in the works, between this low here and this high here, this is the 61.8% here. So this is where the market's going to stall. And it is possible that the market, just when that's the trouble with the markets, isn't just when you think you're on the right track to making some pocket money, then the market changes on you. So we just need to be aware of that change. If it's going to occur, I don't know if it's going to occur, but it would be in that case we would need to look at all of this as the A wave to the upside here, the B wave to here, and then the C wave up here in 5 waves. So in this case, we'd see 5 waves up here, and then we would come down for our C wave over here as such. These moves up here. So also too, this area here is really quite important. We've got 2800 here, then we've got 10, 20, and 30 here. So this 30 here is the top of group 1, and we can expect a lot of support to come in on that in this space. For quite a few reasons actually, because of the wave structure in this space here. We'll end up with a lot of waves, with a few wave 4s rallying back into this space, and we're going to look at that. So it's going to be a bit of a tricky thing actually getting through this here. But if we're going from wave B to wave C here, one of the things we can look for is, because this is group 1 here, 10, 20, and 30, I'd just call it 1, 2, and 3, because we can have it at minor level degree, or we can have it at sub degree or micro degree as well. But anyway, 1, 2, 3 is group 1 here. And you can take a lot away from this, because I know that if the number 2 here in group 1, and this is any group 1, but the number 2 here, the 20 in this case, if that becomes the retested resistance, right, what happens then, it gets pulled down to the closest largest number, in this case the 2800 here. So that's, the 2 is really important in a bear market. It's just a little signpost along the way that you can practically use, 90-something% of the time. It's great. The market can spike through it, but it must retest it and find it as resistance. If you know that, then you know that the market's going to come down further from that point. It's just a little thing, but it's very valuable. It's a little bit like if the number 3 here becomes the support, if you're moving up in the market, if number 3 becomes the support, then you can be pretty much assured you're going to get to the next level, which will be the 5 here. So, and of course, from the 800 to the 900, these are just Fibonacci numbers, 1, 2, 3, 5, and 8 here. But there's a little bit more to 8 here. As you know, we use group 2 here. I won't go into that. So it is possible for the market to come to this point here and have another 5 waves up here as a larger A, B, C here. It's possible, but I don't think it's the primary count, because when you're in an ABC, more to the case, when you're in a, if I can just come back to the daily chart here, when you're in a wave 2 here, from 1 to 2, it's normally very swift and sharp. So it's normally the A wave, the B wave, and the C wave. It's quite sharp, and that's it, and it's normally 5, 3, and 5 here. So to get a very complicated B wave in here that's going to take up more space than wave 1 here, it's not really the personality of this structure here, really, of a wave 2. So you can see that if the B wave goes up through here, then it makes all of this correction here really quite time consuming and quite large compared to wave A here, where if we're in a wave 2, then intermediate wave 2 coming down here as a wave C, it should be swift and it should be simple. So I think that we're on the right track to come further down here, but as I mentioned, I just want to point out we are moving into a sticking point here, and we can move that stop down here down into this space here, but we'll look at that on the 15-minute chart with a bit more detail. So from wave A here to wave B here, we could count this as wave A here and wave B here into here, and then I've got 1 in here and 2 here. Actually, that can be counted a bit differently. I might just go to the tick chart. It doesn't matter. It doesn't matter. I don't want to waffle on too much. It still end up the same. But yeah, so we do have an A and a B and a C wave here for the B wave. So we had that top in play here, and then we had, and that top's not even there too. So it's on that one. That's the actual high here. The tick chart is my kind of real working thing. This is just a sort of display, really. So we've got 1, 2, 3, 4, 5 down through to here. And the thing was, is I was looking for 3 waves to come back up here. And with the 3 waves coming back up here, I didn't get them. I actually got 5 waves coming back up here. So I found that really annoying. So then looking at all of this, it's a little bit complicated. We can look at this in 2 ways, and we're going to look at this in 2 ways as well. It's hindsight, but it's worth it. So I could count 5 waves up here, so that caused a bit of a problem. But then we also got 3 waves coming down here, so I can look at that as the B wave, and then I've got 5 waves coming up here to make wave C. So I've got from wave 1 here, I've got an A and a B and a C wave here for wave 2, and then I can look at this as wave 1 down here, wave 2 here, then wave 1 here, wave 2 here, and then we're going down for wave 3 here. Wave 4 will pull back up and test the 2850, could go a tad high depending on the pressure and so on, but then we've got, well, if I just draw this out here, we can look at wave 4 and then wave 5 to come down, and then we're going to have wave 4 coming into play here that will pull back to the 38.2% retracement level from wave 2 to wave 3 here, or to the wave 4 of 1 lesser degree, or essentially the closest largest number. It will dance around this a little bit here, and then once that plays out here, then we're going to have these ones come down. So then we'll have 5 waves come down here for wave this one, and then we're going to have this here as a wave 4 here. So you can start to see the problem that we've got here in terms of, you know, that alternative count where the B wave can go back up here somewhere. You're probably going to be, you know, you're going to go through an emotional thing here. I mean, the markets are a mirror of your emotional state, unless you can detach yourself and become an observer. But that takes a couple of glasses of red wine or a bit of meditation or something, or you trade less. You just put in such a small amount in the market that not quite so much that you're bored, but that you've dropped the attachment, you've severed the attachment, and then we'll move down from that point here. So this is going to be a tricky area here. So what we can do here, if you are short and you're going to go through this experience, and it's really important to watch yourself through all of this as well. That's the only way that you learn, by observing your own behavior. So what we can do here is we could, somewhere down here that makes you comfortable, and probably the sooner the better, because you don't want to be making decisions once you've been caught up in the rift here. So taking a percentage at 28.30 that you're happy with, and that you can keep the stop out of the way up here, whatever that may be. And also too is that you want to make sure that when you take that percentage, that the whole trade is in profit. So if you get stopped out here, you're not going to have a loss at that point. Okay, you still want to be in profit, but to get the big bucks, to get further down, it takes courage. But anyway, we'll see how we travel through all of this here. And I'm not interested really in putting any sort of trades into this space here either, because it's trading wave. You shouldn't trade wave 4s at this green structure here. Not if you're a trend trader coming down. You know, it just depends on what structure you're trading, but wave 4s can get complicated, and you know, they're the ones that can take your money, so be mindful of that. The tick chart, okay, so I've also got another way to, sorry about that, but another way to view all of this here. Let's just imagine for a moment that this 61.8% area here, if we go back to the 2-hour chart here, Not that one. 1 hour chart. So this one here, if this is going to be wave B here and go up for wave C, then this little area in here needs to be counted a little bit differently. So I'm going to go to the tick chart and just point that out. So this is really just sort of lessons really. Where are we here? 1 week here. So if we've got the B wave up here, then we can look at this move down through here as the A wave in 5 waves. I know this is in five waves here, so this is why it doesn't really make much sense. It was just a secondary count. But this appears to be in 3 waves here. This is in sort of 5 waves here, but I don't know. This one. So basically an A, B, C, D, and E here for the B wave, and then coming down here, we would have this C wave coming in here. So we'd have wave 1 here, wave 2 here, and then 1 and 2 and 3 and 4 and 5 coming into here, and wave 4 coming back, and wave 5 come. So this is where it can complete. So we can, I can't draw on this side of the tick chart, but this wave 4 here will play out, come back to the wave 4 of 1 lesser degree here, or 38.2% retracement level. Let me just check. Yeah, that structure's fine. So technically we should come back. Not that we have to, but it's always just good to put the things in place first. So 38.2% retracement level is here, that's the wave 4 of 1 lesser degree here. So what we do is we take that wave 4 here and the 38.2% retracement level, and then that's where we get our first sort of zone from as such. But we do have to contend with number 5 here, the 50. So 5 being the second strongest number in the market. So yeah, so that's all bouncing off the 40 there. So come down, bounce off the 40, go back to the 50, and then drop down to the 30 here. And that brings us in close to the 61.8% mark here. So that's where it can terminate, and that's where we're going to take a percentage off. That's going to be comfortable for us. I don't think this is the case, but it's my job to. That's why you pay me the big bucks to explain that, or the possibilities anyway. It's just good to have somebody to bounce ideas around. Really, that's the main point. Alrighty, I think I'll leave it at that. I've waffled on enough, but we've covered most aspects of it. But at the end of the day, just to recap, the 28.30 is our headache, right? If we're going to go lower, we want the 28.20 as the retested resistance. Then we know that you're safe at that point, and we know we'll be coming lower from that point. We'll also see this is obviously going to offer support as well, the 2800 here, the 8. So 8's an important number. It's a minor level 8. So the numbers kind of run like 1 is the strongest number, then 5, and 8 and 3, funny enough, kind of carry the same weight. So that's kind of, and this is a minor level, so it carries more weight. Well, it's a whole number, isn't it? It carries more weight than these smaller numbers here. It's all fractals of numbers. Alrighty, thanks for tuning in. Appreciate the support. Thanks.